So hi everyone and welcome to the session. I'm going to hand over to Rapalang and he's going to introduce you to Precious. Over to you, Rapalang.
Hello guys, thank you so much. So at least today I'm not in strangers of places or in my car. I was able to at least manage to broadcast to you in our office, so which is quite great. Yeah, so I really have the pleasure today to be introducing to you my sister. Precious is my sister, if you don't know about that. So yeah, we have worked together for quite some time, and then she has really been part of and member of the family. And yeah, I thought I would have her profile here, but I know it by heart. I know it by heart. So Precious is a chartered accountant and a registered auditor, and she has worked with a number of entrepreneurs over the years, and she's really passionate about entrepreneurship. And I did also attend one of her training because she runs a GET Consulting, which is a consulting agency for small businesses. So I did attend one of her trainings full on training. I think it was about a 5-day amazing training with women. I was the only man in the in the training. So, but it was really, really great. Got a lot of value out of that. And Precious also sits in a number of boards. So she's a serial board member. So she has really done well for herself, but she will get to tell you a little bit more about the work that she does. And she's an author as well. So she will talk about her book as well. Normally we distribute her books in most of the programs that we run, which will give guideline in terms of the compliance for your businesses, as well as the full-on accounting and some of the regulations as well, if you want to familiarize yourself on how to comply with a lot of regulations. So I read her book myself because it really appealed to the work that I do to ensure that I'm up to date with industry, information. So yeah, Precious is really, really the go-to person in terms of any advice and mentorship and all of that. She's done quite a lot of work in the programs that we have run. So she's part of the family. We have done a lot of work with her in all the programs of YIDI, and she continued to add tremendous value to the YIDI community. So Precious, so I didn't have to read it. I just spoke it from the heart. So because we have been together for quite some time. So thank you so much for joining us. And I believe that the entrepreneurs today will get so much value out of the session that we're going to have and out of what you are about to share. So, and I would also like to appeal to the guys to do ask a lot of questions. Precious enjoys it when there's a lot of interactions. So we really like you to interact as much as possible. Do use the chat group. If you have to be unmuted, then we can unmute you so that you can speak. And yeah, so I present to you Precious to take you through the session.
Thank you so much, Rapaling. Yeah, you make me blush, so I just that's all I can say for now. I am so grateful for the opportunity, guys, and I hope you're gonna engage. I will allow you to have questions, but I also just wanna us to have a holistic approach, irrespective of what funding you are looking for. I do understand that for now, most of you have moved away from your normal core business. You now are looking at other funding avenues, even for COVID, so that you can have a going concern business. And that is good, but we need to also be thinking about the long term. We also need to be thinking about where to fix up the basics. Everyone who has attended my training, they will know that I honestly believe if the fundamentals are in place, no matter what problem you're gonna come across in future or anytime, you will be ready to actually deal with them. So let's begin. And also use the chat. As I'm presenting, I'm gonna keep it open for not for questions, but just for your notes of the things that maybe you are not sure whether it should be a question or addition. And remember, as entrepreneurs, we always learn from each other. So you please share also your experiences in what we're going to be covering so that we can make this fruitful. So I am then now going to start. I'm going to just share my screen. Is everyone able to see Rapalang? Are you good? Rapalang, you have unmuted, you have muted yourself.
Oh, sorry. Sorry.
Okay.
Yeah, so
are you
yeah,
able
we can
to
hear you nice and clearly, and the presentation is on the screen as well.
Perfect. Okay. So as Rapalang said, I'm from GAD Consulting. We started about what, 10 years ago. We started as an auditing firm, and we moved to an accounting and tax, and we moved now to training and development and publishing. We seems to be sticking on that. With everything that has happened with COVID and training being face-to-face, we have really moving ourselves to digital space. We have been running a few webinars. So all I just want to say to you, why I'm sharing that experience is that don't go to business with a set mind. You allow yourself to continuously be responding to the market. If you do that, then you will last. Introduction of our team and the table of content for today will be looking at the introduction for the team, why we struggle with funding, what informed the funding strategy, what are the funding strategies that we can start, where do you start, and our contact details, and obviously we'll allow also for questions. Okay, as Rapalang has already done my introduction, I am just gonna add in one of our associate director who is actually responsible for funding support. Her name is Hlobisile, and she has done quite a bit. She is actually even doing her master's in development finance this year to make sure that she actually come up with solutions that solve our problems. And as Rapalang said, other than that, I think he said everything. I'm a serial director. I sit on 12, and now I chair 6, not 5. I guess I haven't updated that. And I wrote a book, Essential Finance Handbook, which you're going to have a copy of. And we produce and develop several training programs. One of them is strategy. We're working on the business health check now, the app. And we also have designed several content in relation to business administration. As Rapalang has just said, that we actually build the foundation from compliance, but then lead it to then finance and other things. Okay, so what is exactly is the reason why entrepreneurs struggle with funding? Why are we in this space as South African, especially as South African entrepreneurs? What we have found has been we generally just lack a business acumen. Within that, financial literacy is very low, which means even when there is an opportunity, how we're responding to that opportunity, we are unable to actually talk to the issues that the funder or the person who's going to sign off that check can actually understand, and it makes a business sense. We generally are not ready. If you were to look at what is happening with COVID, there were lots of applications, but most of those applications have the outcome of that has been non-compliance. As entrepreneurs, we don't take compliance serious enough. There is enough support, but we generally don't. And I understand because it's quite, it's tedious. It's a lot of it, but you just need to figure out the what needs to be done, when it needs to be done. And once you've done that and you have a checklist, you can set it up on your Outlook as a reminder for you so that it doesn't fall off the cracks. But the other issue that we have found has been the funding strategy of the business is not matching with the business model, i.e. within the value chain. We generally are not as ready for the funder, i.e. we don't know what exactly does the rating of the funder when they are assessing whether they should give you the money or not. The rating funding is based on the type of the fund. And sometimes they look at things like liquidity, sometimes they look at continuity, sometimes they look at things like even the where are you within the value chain. So you have to know what is it that is the rating system by the fund, that specific fund, and don't make it generic. And that is very important, because you see, when you have done that, you already know whether you are in or out. And the last thing that funders look at is how comfortable are you with your own information. So if they have a pack and they go to a certain page and they ask you a question, are you able to actually articulate yourself and explain yourself? And again, we as entrepreneurs, we take this document, we give them to consultants, and we have not even read the document ourselves, and then we get caught up on that. Now, the other one, which has been one of the one that for me was quite heartening, has been we don't understand the alternative funding products that are existing within the market. So we go to a specific fund and we are not saying, actually, you're going to be my plan B or plan A or plan C, because these are other options that I'm looking at. Because of that, then the funder thinks, you know what, this person is going to be dependent on us instead of them actually going out there. I think most of the time when you're looking at the space, you're just thrown to the wolves. So we as entrepreneurs, we're going to need to understand what are the internal financing processes and systems that we can put in place where we can self-fund ourselves. And when we're going outside, what are the things and why would we go that way? The second last one is a bad credit score. And having been in the entrepreneurship space, I think 5 out of the entrepreneurs that I work with are actually have been bankrupt, but never filed for bankruptcy. They just got a bad credit. And in other instances, which is also in my case, is not to create the credit. I think you have to have a good credit. And 2, you also must create a credit history. As entrepreneurs, we are not investing our time on that. You have to. Remember, when you are getting funding, they are not just investing on your business, but they are also investing on you. So they want to know, the person who's going to make these decisions, how are they making decisions? If you have a bad credit score in your personal capacity, sure as hell, they will think you're going to do the same thing in your business. And because the principles are exactly the same. The last one, I personally think this applies to us as Black people. We have a negative perception about credit. I remember I was presenting some training session and someone said, yo, ikweletu Precious. I think we just, ikweletu has been somehow been entangled, infused with our background of growing up poor and not being able to afford. Whereas in business, credit is the only way you can build a business, a sustainable business. You use other people's money to build a business. You don't use your own money. And that is why you started a business. So we have these perceptions that we bring into the business, and you find that you're actually not even leveraging, and I will cover what I mean in more detail a little bit later. We end up not leveraging what we've already built. I'm reviewing, I've got about 5 clients that I was reviewing their financial statements. These businesses are applying for ESD funding. But when you look at their financial statements, they have assets that the ratio of the asset versus the debt is 1:5. 1:5 is almost like a 25% of the total assets, and the person is asking for funding. Why would you be asking for funding? Because it means there's another 25% that you can raise on your own, within your own balance sheet. And also you look at their creditors listing. The creditors listing or which is your suppliers, it's a shorter list than the list they have when they have customers. So, but I will unpack that. And I then asked this person and said, why have you not been using your leverage to actually ask for more? He said, equality Precious Mvulane equality, even in my personal life. So you're taking your own perception on, and then you transferring that to business. Again, it also linked to that business acumen. So I hope you can identify with some of those issues, and if maybe you want to add more, please do, and we can discuss on the question and answers. Rabaleng, you want to come in?
Yeah, there's a question there from Gugu, who is asking. I'm just gonna read out the question. He said that how do we find out what the funders' requirements are? They don't always disclose that information.
Okay, so they don't disclose their scoring, but you can ask. You can say, you know what, I've got, so you go to a funder's website, they will list the basic requirements that they're gonna need. You have to ask for their scoring because you wanna know which areas you should be focusing most on. If they're not providing that, you will then also understand that it will not because maybe they don't want you to get the funding, it will because it's a mindset of that individual. Funding is supposed to be a partnership arrangement. And I know some funders, they act as though they're hierarchy of, I don't know, some king somewhere. So you should then also ask yourself, do I want to be associated with a funder who's not developmental? Anything in South Africa right now, especially in financial services, we should be working with people that are for developmental. So ask them, give me a full detail on how you score, how do you actually assess, so that as I'm building up the package and the investor package, I keep those things in mind. So almost like having a brief session with the funder before you send the application. And that also allows you to build a rapport. Because at the end of the day, the person who makes a decision is not a machine, is a human being. You need to build that relationship. Google, I hope that helps. May I move on to the next item? So as I said earlier, let me close this. As I said earlier, 1 second. One of the main reasons why we struggle with funding is because just basic financial literacy. In business, we only deal with 4 things: income, expenses, and assets, and debt. Those are the only thing we deal with. No matter whether you are dealing with the government, you're dealing with the individual, in finance, that's it. If you understand the integration between income and expense, asset and debt, you will master whatever challenges you're gonna come across in finance. Within that 4 things, those 4 things are basically under income and expense. That is what we call income statement. Asset and debt, that is what we call balance sheet. Now, income statement is measuring the performance of the business, whereas the balance sheet is measuring what? The position of the business. So your aim is to keep the top part of these lines of income statement and balance sheet high and keep everything below the line to be low. Because that will then means you will then increase your profitability. When you increase your profitability, you then increase your net worth. Ravelin, I think one of our participants is, okay, Smanga needs to be unmuted. Okay, so remember what I said. In business, you're only gonna worry about 4 things. These 4 things, we see them on the financial statements in terms of this. This is what we call financial statements. Now, a funder, what they want to see, that your income is increasing, your asset value are increasing, and your expenses are kept as low as possible, and your debt are also kept low. That is what they are looking for. They are looking to understand that as you're building up this, you also keep in mind that the assets produces income, and the income that you have generated or that you have earned, if you are in professional services, are actually funded by the expense. So you can't generate money without not spending money. You have to spend money to generate it. So from that, the spend of that money, you will actually be funded either by your personal funding, which we normally call it a shareholders loan account, or you are funded externally, which is your debt, your normal finance debt, which can be banks or even individual funders. But that debt also is funding the asset. So the reason why the asset has to be able to generate the revenue is because at the end of the day, the asset must provide the return on investment. And that is why it's important that as we are building up to this, you understand that at the end of the day, the asset is what we own, the debt is what we owe, and the money that we are generating and earn, and for us to earn that money, we must have spent some so that we can be able to run a profitable business. And that's it. And the more you increase your profit, the more you're going to increase your net worth. If you're having more losses, then your net worth go down. Rabaleng, do you want to come in? Okay. Can I take questions, or there is more? I'm just opening up the chat. Okay. Okay. Thank you. Thank you, Kuku. Okay. So guys, I'm trying to cover basic principle first, and I'm going to cover the rest, but I don't want to leave, we're such a small group, I don't want to leave anyone behind. So if you have comments or questions, please let me know. Rabaleng, if you want to add anything, I mean, you are one of the most experienced consultants yourself, please also add. Okay, so what then informs the funding strategy? So what am I talking about when I'm talking about the funding strategy? So basically, for you to fund your business, you must be clear what's the goal, what's the purpose, why do I actually want to actually fund exactly? What is it that I actually want to fund in this business? So the what, and in general, funding anything reside within this space, which is an asset, which is because an asset is actually an investment. Okay. So a goal determines what type of funding strategies you're gonna have. The goal is the one that drives. So the goal has to come first before you come up with funding strategies. Time. How long are you actually gonna be asking the money for? The period, the amount that you're asking for. And the last thing, the return on investment. Now, when you have done that, you then will come up with funding strategies. Generally, funding strategies are about position, the leverage. I spoke about this earlier when I was saying that this client has a 25% on debt and on their, in relation to their asset. He has not actually leveraged the positioning of the business. So, which means there are several things that that entrepreneur can actually do. So another funding strategy is a contract. You can get a contract financing straight based on your profitability. Again, there's a third one, which is capital, which we generally call it Capex. Again, you have to look there on the return on investment. And the last one, my favorite out of all of them, working capital, the cash flow, the one that we're always complaining about. So those are the basic main funding strategies that you will actually come up once you have determined what is my goal, how much time do I need, how much is the amount that I'm looking for, and what is the return on that investment. Always remember, the return on investment has to be above the market rate. What do I mean? So, for example, if you go to a funder and you say, I need 100 Rand, once I have invested this 100 Rand, it's gonna give me maybe what? A 6% return. As a funder, I will not even look at you when the normal interest rate as we stand right now is averaging at above what? It's 8, from 7.5 up to 11%, depending on the risk. So I will then be asking myself, why should I actually be investing in your business? So that return is also about understanding what's the current interest rate that is being offered on different instruments based on different risk and industries. And a typical test also of that, you could actually, like, for example, ask yourself, if you have invested in the business versus what are the dividends of the business, those are also returns, because remember, you can either invest in your business or you can invest in other people's businesses. So again, you gotta need to understand what's your average return, and that return will include interest, will also include dividends. Because again, shareholding or equity is type of funding. Remember I said you can either fund as a finance debt or you can fund by equity. So that return includes both interest rate and also dividends. Okay, so let's go a little bit deeper on positioning. Rabeling, you wanna come in? Do we have any questions?
All right, yeah, I see a question here from Paseka.
Ooh, your volume is quite low now. What happened to you?
Oh, I think maybe it's the headphones. Okay, let me. Okay, can you hear me?
Yes, yes, I can hear you now. I'm
yeah.
opening up also to read.
Yeah, Pasika was just saying that in case my connectivity does not remain stable, I would like to get your opinion on 2 questions below. You can answer them later if it distracts your flow. How does an entrepreneur value and validate its sweat equity to investors as part of the funding request? And then the second question is, what are the probabilities of investor consideration sweat equity as security? Big English right there.
Now that is fine. No problem. I think I can actually answer it because we're moving to another session now, to another component. So I think what I have found in most cases has been, we as entrepreneurs have not necessarily done very well. Let me mute Rapeling. We have not done very well in making sure that our books are clear, i.e. are clean, and we actually can be able to account for all our time and effort. As a result, you then have underestimated the asset that you have put in. So your asset is not recorded. And the money you have put in terms of your shoulders loan account is not in. Which then lead to, now, how can we now really measure this sweat that you are talking about in terms of equity? So my understanding is that the best way, or should I say, my suggestion for you is that the best way that we can value the business, make sure that your books are clean and they are clear on how you have built that business. Number 2, also make sure that the recording of the effort and the recording of your time that you have spent in this business is also in your books. I generally say this to entrepreneurs. You are an employee, you're a director, and you are also a shareholder. Let me say this, as an employee, you are actually paid a wages, but as a director, you are paid a salary. As a shareholder, you are paid in terms of dividends. But we as entrepreneurs generally choose to be paid to do the work of the employee, which then does not increase the value of the business. So you need to make sure you keep your books clean, Pasek, and you also need to make sure that you constantly are valuing the business yourself, because valuing the business is very easy. You look at the contract the business is generating, and you also look at the assets that it has, and how that asset is making sure that that business is profitable. So that is how first you should be working towards valuing your business. The validation, it's going to be easy, the validation of your sweat equity, if you are accounting for things the right way. So that when they find a request for that, you can actually show it in terms of your intellectual property that you have built up, but you can also show it in terms of the systems. Because what you have to remember also that the systems that you are building is what build the business, not your time that when you are spending as an employee. Now, what are the probabilities of investors considering a sweat as a security? Generally, they don't consider the sweat equity as a security. What they consider as a security is a clear, tangible asset. And as I said, as entrepreneurs, we do not spend enough time building assets. We spend quite a lot of time going around and building things, but we fail to document it. We fail to build systems to justify the investment. So the security that generally they will ask for will to say, value the current asset. They will also say, give us your customer list. That will give them a security that this business can actually meet the requirements of what they are looking for, but also the return on investment. The bottom line, guys, you better have to start thinking very hard about what's my exit strategy in my business? How am I going to build this business? What's my growth plan? How am I actually going to grow this business? And who should I bring on board to help me to build my team so that when I am ready for funding, big funding, I'm actually able to justify the investment. I hope that helped, Paseka. Okay, let's go to positioning and leverage. So as I said earlier, positioning is about leverage. It's about looking at what is it that is currently happening in your balance sheet, in your positioning of the books. So because I explained earlier that let me show you. So I said earlier that the balance sheet is about positioning. So when you're looking at leveraging your asset, you basically want to have a ratio analysis where you have a ratio of 2:1. 2:1 is actually 1 to 50%. And in other businesses, you can move as far as 75%. Depends on the relationship you have built with your debtors. I mean your funders. And your funders are not exclusive of your suppliers. I don't want to use the word suppliers debtors here, because at the end of the day, your debtors are sitting here, which is your customers, but your suppliers are here, and your suppliers are actually also providing credit to you. So leveraging your assets is to make sure that in your asset block, whether that is current asset or it's actually long-term assets, you are making sure that you are actually able to recapitalize the business. And how we generally do that? You can do sale and lease back. You can do the refinancing of the paid up assets. You can do renting out of the asset for excess capacity. Again, you are looking at within your balance sheet. So that is why it's important to keep your books up to date, clean, and consistently be checking and making sure that everything is actually okay within your business. The second strategy is contract financing. What a funder is looking for here is clear profitability. What is the profit that this contract is going to generate? In most cases, they don't look at anything less than 25%. So, and that is taking into account both direct and indirect cost. What do I mean about direct and indirect costs? Direct costs are the ones that would be a gross profit margins. Those are the ones that we are saying they are actually above the line, direct costs. Indirect are the ones that are operational expenses to make sure that you fulfill. There could be admin, there could be a back office, but they all end up, they want to know how this contract is going to be supported. So they will ask for both direct and indirect. And as I said, they don't take anything that is below 25%. So whatever that you are setting up on your contract financing, if you are looking for contract financing, make sure that you trim that fat. Make sure that the business concepts around that contract are tangible enough that they can help you to make sure that if you need to buy an asset, that asset is easy to dispose after you actually have utilized it, or you can use it in other contract. Your time also must also match the time between your contract and also your funding. So you can't go for funding that has a longer period than your contract. It has to also be matching. The next strategy is Capex, capital funding. That one, you have to look at the total lifespan of the asset. So time is important. So you're asking for funding, again, you have to match a lifetime. When they are looking at the lifetime, the funder is gonna look at what is the maintenance of that asset, what is the insurance risk, what are the capacity, what are the costs related to the business that will be supporting this asset to actually run efficient. And that is important because they want to know that you have an ability to pay back the money. So, and please note that on capacity, they don't look at capacity in isolation of your demand. You must demonstrate that the capacity of the machine that you are buying or the asset that you are buying matches the demand or the forecast that you have on your sales. Because if it does not match, especially when it's below, they will probably not fund you. So as you're completing your funding application, make sure that if the capacity of the machine that you're asking for maybe produces 10,000 units, your sales should be either be above the 10,000 unit, and if it's not, try to make sure it's at least 80%. And account for 20% as ad hoc or as your promotional or as additional. Come up with a clear sales strategy on how you're gonna bridge the gap of that 20%. The last one, my favorite one, is the working capital. So working capital is what we also we will say as entrepreneurs, hey, no cash flow. We don't have cash flow. This basically is the problem that has been caused by us entrepreneurs, again, not matching terms and conditions between our suppliers and our customers. So you find that most entrepreneurs are offering their products and services for credit, which is customers in here. But when they buy, they're buying cash. They are not creating a relationship with the supplier to make sure that they match their arrangement. Because remember, you get money from your customers. And no wonder there's no money in the bank account. The only way you can make this bigger, as I have made it bigger here, to always have a cash, you gotta need to make sure you balance the relationship that you have between your customers and your suppliers. I also have included inventory there. Watch out for inventory, because sometimes we have a cash flow problem and it's because we're not managing our inventory. Rabling, I'm not sure how much time do I still have. I just want to share another case study.
Yeah, so we will be breaking at past, so you still have about maybe 14 minutes or so.
Perfect. Okay, so let me tell you one of my clients who had was within the NEF program that we ran. This gentleman, he does supply chain related services within the engineering sector. He doesn't manufacture. He's basically a retailer. He takes the goods from one place, he gives them to somebody else, and that is his nature of the business. He had came to the NEF program in his mind thinking that he actually needs funding. So as I am talking to him, I am asking him about his business model and his value chain. The first question I asked him was, okay, Sipo, one, your customers, when they're ordering the stock from you, how long do they expect you to deliver the goods to them? He said, Precious, generally is 3 to 5 days. When they place an order, they will need those things in 3-5 days. I then said, oh, okay, sure. I then asked him, your suppliers that you have, how long when you place the order with the suppliers do they take to have the order ready? He said, depending on the time, Precious, is between 4 hours to 8 hours. If I place the order after 12, I'll get it the following day. If I place it before 12, I will get it within 4 hours, I can go and fetch the items. Great. And this guy, he is coming to us asking for funding because he has a warehouse where he stores his stock. He also has a bakkie that comes and collect the stuff and deliver the stuff to the customers. And he's saying he needs more money to buy more stock. Based on the scenario that I have just given you, do you think he needs to be having a warehouse and keeping the stock? Please answer yes or no. Who says yes? Please type it on your chat. Yes, no.
And we can unmute you guys if you need to say something.
If you want additional more information.
Yourself, or we can unmute you.
You are right, Google. He has no need for the warehouse. And in my analysis, he didn't even have a need for a bakkie because he's not in the courier business. He's not in the delivery of transporting goods and services. He needs to actually take the money for the bakkie and put it away, sell the bakkie, get more clients, build up the relationship with suppliers, and because he can actually fully outsource the transporting of the goods from the suppliers to the customers. And actually, he can run what we call it a JIT within his value chain. And this guy looked at me and started crying because he had been blacklisted before by not paying the rent. He didn't even need to pay for the rent. And the car that he has been paying for should not actually be paying for. He was buying convenience, but he can actually secure the convenience by making sure he has a contract in place and there's a specific arrangement on placing of orders. And let alone he had more than enough time to fulfill the order because the time the customer expects him to deliver is 3 to 5 days. Oh, guys, The issues of finance are tough. Anyone who wants to say anything, Rapale, is there anything you want to add?
No, I was just saying that we can unmute the guys if they need
If
to
they
add
want,
anything
yes,
once they
because
come.
I'm actually finished with this. Guys, in this, I'm trying to, okay. So what we have to understand as entrepreneurs is that we have to be very clear about what is our business model when we're dealing with the working capital or having a problem of our cash flow. But we also have to understand what's happening, where are we on the value chain, and what gives us an advantage, what gives us a disadvantage. And the second, last two things that you need to make sure you do, you must plan your spending. And you must buy from the same suppliers all the time. The things that we do as entrepreneurs, today we're buying at Macro, tomorrow we're buying at Pick and Pay, the other day is Spa. We then do not create relationship. Remember what I said, how you build a business, you use other people's money. For you to be able to use other people's money, you must create a relationship with the suppliers. We do not invest enough time creating a relationship with suppliers. We think it's just us about buying stuff from them. No, it's about us partnering with them for them to help us build our businesses. So get a credit for your top 5 high expenses to make sure that you can actually leverage. And there's nothing wrong by you offering your customer cash, but you buying credit, because your aim is to keep more money in your bank account. If there are no questions, Rabeling, I'm gonna just wrap up and then we can take more detailed discussion with everyone. As I have said, have clean books, fix your accounting. Remember, your accounting is demonstrating how you make decisions. If your accounting is a mess, it also indicates your decisions are a mess. Set a clear goal of why you actually want funding, because the goal then directs which funding strategies you should actually put in place. Learn the business language. Don't be freaked out by the words the accountants will throw in your face. Remember, you only worry about 4 things: income, expense, asset, and debt. Those are the only 4 things you need to worry about. How they will classify them, that is their own problems. You want to make sure that you're always profitable and your net worth is increasing. Clean up your terms and conditions to make sure also that they are enforceable. Take control of your finances. Build a team of advisors around you. Do not operate in a silo. Consistently be touching base with them. I said to another client of mine that I recently enrolled that if he had just taken his financial statements and gave it to somebody else, other than taking the financial statements, which he didn't understand, to a funder, he would have been so far. Guys, build a team of advisors does not mean it's people who are gonna ask for payment like myself. I will always ask for payment. But I do run webinars, I do run sessions where they are free that allows you to ask questions and platform. So advisors does not mean paying advisors. It means just a team of people that when you wanna question something, you can just pick up the phone and say, you know what, I'm not sure what the heck is this. What does this really mean? Again, I think as entrepreneurs, we're always just pretending as though we know what the heck we're doing. Stop pretending. If you are not clear what the accountant is giving you, take it back to them and say, explain to me. Start meeting with your accountant on monthly basis to analyze and read your finances so that you can be on top of things. Remember, business is built from using other people's money, but for people to give you the money, your books must be clean. The books must make sense, and you must be running a business that is profitable. I think I'm done rappelling, and if there is more, I am ready for questions and discussions. I love interaction, guys. Please talk to me. I feed from your questions. I'm looking at questions. There's no questions. Are people posting them on chats? Rapalang, please go ahead.
Yeah, I think what we can do is that because it's almost half past, so we can take a short break now, and then while they're thinking about their questions, and then when we come back, and then we can be able to entertain some of the questions, and then we can take it from there.
Perfect. Rapalang, before you go, may I also request for you to share your experiences on what we have seen on some of the things that we have discussed, because I think as consultant, it's important that our experiences are used, our mistakes are used by other people to be better. Also, entrepreneurs, also yourself, let's engage, let's talk. How long is our break?
It's going to be 10 minutes, and then yeah, after 10 minutes, we will be back.
Thank you so much. I will just mute.
Yeah.
Perfect.
Thank you. Precious?
Hello.
Oh, yeah. Good. Yeah, I think we can come back. There has already been a couple of questions, but maybe before we get to the other questions, part of the requirement as well is the off-takes, which are quite tricky at some time, because then the funders would want commitment that there will be, a going concern on the transaction, and they are not putting their money, shooting from the dark when they don't know who's going to be the customer already. So what is the best way? Because I was dealing recently with another entrepreneur. It was this week, actually. We had a chat with Mpo so that Mpo can assist them. Mpo is also a propreneur. She's actually also here in the group. So to say that, what's the best way to position yourself for offtake agreements so that you can easily convince off-takers and also meet the requirement of the funder, because offtake agreements do play a bigger role as part of the requirements from the funders.
So the offtake agreements is basically your projections, your sales demand forecast. And most entrepreneurs, they thumb suck this figure instead of them going through a specific list of potential customers. So for example, one of the clients that we did an NEF application for, we listed a list of potential clients that she had actually not necessarily approached yet, but she knew those are the guys that buy that type of product and service, so that she can then be able to approach them. She also went through and done a company profile of them to check what's the volume are they currently taking. And she went and did a more research in understanding who are the current suppliers of them for their specific competitors. I think as entrepreneurs, we think the offtake agreements, they're just created from thin air, or someone says, here's the contract. You have to do the groundwork from the customer side by build up a clear customer profile and the buying pattern of this customer profile, and also understanding the value this customer spend in each order and also over the year. You then need to also assess where are they buying the stuff that they're buying, at what price, and how often do they actually get those orders fulfilled. That then allows you to be able to, when you are talking to the funder, even though you have not came to a conclusion of having a purchase order or an agreement, but it allows the funder to feel comfortable that this person actually understands the industry and they know who's who in the zoo for them to be able to take advantage of the opportunities. So I think as entrepreneurs, we have to do our groundwork. of checking those things. But in last part, we also need to make sure that the funding is not just available to from someone who's external. The suppliers, as I said earlier, are also your funders. They are your funders, and some of these suppliers, they actually even have better rates than a general funders because they have an interest on you actually succeeding. And that is why I generally say entrepreneurs, if you are in manufacturing, you're looking for asset funding, go to the bank. Don't go to the mainstream. Go to the person who's manufacturing those equipment. Ask them who are their partners in funding. Ask them how can you partner with them for you to build the capacity? Because some arrangement, instead of you buying the equipment, you could rent it until you have raised your capacity to a point that you're able to buy it. Sometimes as entrepreneurs, we are so fascinated or so stuck with production of factors of production than focusing on just how can I service this contract? How can I make sure that I retain the customer? I think for the first 3 years of any business, your focus should more focusing on creating a very strong customer base while you are building up your relationships with your suppliers, so that when you are ready to expand, you are then able to do that and you have a right foundation. And that, I hope, somehow answers some of the question you are raising, Ravalang. I'm gonna go to Gugu. Gugu says, funding is difficult when you have not been trading for long. People are not certain whether you will be around for long haul. And our business has been actively trading for over 2 years. As you know, Stat says new business need to about 3 years to see if it will survive. I think one, you have to take out, Google, that perception. You see, for a startup of someone who has never operated, yes, maybe 3 years. But for someone who maybe was a manager or an executive somewhere who has some business experience, it shouldn't take us that long. I think we need to have to step it up out of the steps that get done, and they then put everything in a blanket. So I think the best way of approaching the funding is to be very clear. What exactly am I funding for? Am I looking for funding for a contract? Because if I'm looking for funding for a contract, I have several options. One option is to get the contract and give that contract to a fund to fund the contract. But if I don't have a contract, do I at least have a purchase order then, that a valid purchase order? You can raise money even on either contract or a purchase order. But also, you can even raise money from the current customers that you have on your books. So if your customers maybe are taking longer to pay you, but they will pay you, you can actually get a financier to actually give you from maybe generally is between 75 to 85%, depending on the industry. In that case, your debt, which is your debtors, which is your customers that owe you money, maybe let's just say it's 100 Rand, they give you 65 Rand, or they give you 75 Rand, or in other instances, 85 Rand, depending on the risk that is associated with that industry and that specific customer who's not paying. That is why you have to make sure that your terms and conditions are enforceable and they actually are according to the industry. So I am saying to you, the funding is difficult, but the reason why the funding gets to be difficult, we are asking the funder to give us an asset, yet we cannot even prove the demand. It talks to what Rabalang was talking about when he said that there is no offtake. Yes, you can produce. Yes, you can demonstrate that you have a capacity, you have a capability, but you are looking for an asset instead of looking for a customer. I will advise entrepreneurs, focus on building customer rather outsource your manufacturing. Outsource the manufacturing first. Build the capacity for you to have a relationship with customers and build a relationship with the suppliers. And then as you increase your volumes, then start then investing on having your own assets where you will produce everything from the onset. And in other instances, you know, with manufacturing especially, you might actually find that they do certain processes, and because maybe they're accredited for that, you find another service provider who does another processes. Try not to be stuck on having everything all in one place. I have one of the guys that I know that I work with in some projects. He has a perfume business. He takes the perfume is done, and then it's on a big containers, like something like 20, 30 liters, and sometimes even a ton. He takes that, he gave it to another supplier who then package it. But that supplier also packaged certain type of product. And then he takes the same product and give it to someone to continue with the additional production. So what you have to really be asking yourself is to look within your ecosystem who's doing this the best and build on their capacity and their capability, and then, but focusing yourself on having more customers. Now, I think this also relates to what I've answered, Cook, when you are saying that some of the bigger contracts you struggle to get because the client is not sure if you have the capacity. Yes, you will not have capacity at the beginning, but if you have contract arrangement with suppliers that can demonstrate a bigger capacity, that the order that you are looking for or the work that you are looking for is actually in place, there is no reason for anyone not to actually support you and provide you with funding. So yes, demonstrate the capacity, but understand the capacity does not have to be within you. The capacity can be built by you making sure you build a relationship with suppliers. There's someone who's not muted. Okay, so I'm looking at the next one. Google, on that one, you're also saying credit limit may not be enough for your current supply. How do you bridge that gap? You know how, okay, and you know that you are capable. So how you bridge the gap? One, you then subsidize that with your credit, with the application for your credit card. Number two, you also get suppliers that can accept at least 50% deposit. The other strategy that you can have, you can say to the supplier, you know what, I'm gonna put a deposit of this amount. When I actually do not, I'm unable to pay you at some point, you will then leverage with that. You can also ask your banker to assist you if maybe you have an investment, or you have, sometimes it's almost like you are hedging your arrangement. You're saying that I will receive this money by this time. Should I not receive this money by this time, I can then liquidate certain assets within my business, and so that I can be able to pay. It's almost like you're putting security. You can also put security for your stock that you've already bought for cash, someone else's stock. And that's in retail, they always do things like that. So, because your aim is to provide security, your aim is to assure the supplier that he will get his money back. Your aim is to try to assure him that even if all goes like boop, or something goes like terrible wrong, at least he will recover an average of 50% of that risk he's exposed to. But you can also start looking at your customers, to see which customers can actually be, you can negotiate to sell your products and services at a cheaper price, but at a higher volume. Remember, to increase your revenue, you don't need to just increase the price, you can also increase the volume. Because the more volume you then have, it gives you a better leverage with the supply, because you're now having more volumes to actually acquire from him or her. I'm going through some on your chart. Yeah, yes, Depo is saying that I admit I'm part of those people that are cynical about credit. In my personal life and in my business, I thought it was a positive thing, but I really not. Okay. I tend to save up along and buy things cash. Oh, Depo, I know, and you're not the only one. Actually, most people, especially Black people that are my clients, they actually feel the same way. And I think it's because I think the way maybe credit was sold to us as a product has always been as though it's a bad thing. It's actually a good thing. I mean, it's a good thing to use other people's money to build your business. And that is why you are in business. Because you wanted to be transparent, you wanted to build a business that is sustainable. So you're gonna then need to work on that perception. You're gonna need then to understand that if you don't have a credit history, when the funder does the due diligence, they may not be able to prove that you actually do have a capability to manage the money. And I'm entering into an investment space myself in property. And I had been buying things cash. The only credit history I had is my bond, and even for cars, it's like cash. And because I would rather not buy it until I'm ready. And I mean, I think everything also was on my husband. I think ladies also watch for that when you're married in community of property, that you end up being tangled on that kind of a mess. So I really want you to start asking yourself how to build a credit. And you can do things, easy things. Maybe like for myself, I started opening up a clothing account. I don't use it, but from time to time, maybe once or twice a year, I will buy just to keep the account active. But I'm using that to prove that I have a credit history and I can manage my credit. And the other thing also is you need to also make sure that you can build your wealth. Building your wealth is about making sure that you can save. So you can then build up some savings, but not build up savings for spending, but build up savings for reinvesting to make sure that your business actually grow or the asset base actually increase. There's another question, last one in here.
I just wanted to also just...
oh, sorry, okay, Laura, I was on the last one. The last one from Cook is, what about surety on loans? What is your recommendation on that? So, remember what I said. When you're looking for funding, the funder is looking for the return on investment on both the capital. He wants to know, are you gonna pay him back his capital? Number two, he also, are you gonna be able to afford to pay him the interest he's asking for? So the capital portion of the loan, always try to tie it back to the asset, whatever asset that you're intending to buy. So if you're asking for a loan and it's a short-term loan, be very clear even in your mind, what exactly am I funding? Be careful about dealing with previous problems in your, maybe a transaction that did not work out. Try to ring fence your debts and your assets and your investments. So the surety that the funder is looking for is that he's going to get his capital back. So, which means find out from him what will be the potential, because others, they will even list, these are the sureties. But in other instances, if you have a good credit score and you have good personal assets, they can actually even take your director's surety also. Again, it depends on the risk. Depends on how big is the loan, how long are you going to be taking that loan for, and why do you need the loan in the first place. What people also do not understand is that when you're asking for a loan or a debt or a credit that you're asking, the credit was meant to accelerate you, was meant to build your capacity. People generally take credit to solve previous problem they have created, which then give an indication to the funder that actually this person wants me to clean up their mess. Clean the mess first, bring the funder for new ideas, for new opportunities, and also for things that will generate revenue. Credit, if you're taking a debt from someone or you're taking a loan from someone, make sure that that loan that is actually going to generate another 100 Rand. It cannot be less than that, because the moment it's less than that, then it means you are not necessarily profitable. Yes, Rabalang.
Yeah, I just wanted to follow up with some of the questions as well, just before you get into another presentation about other funders. So there is also an aspect of the structured finance, because certain needs are funding needs are very specific and might really need some structured finance or an advice from a corporate finance specialist, who will then be able to structure the funding need according to what the market, have, and make the funding proposal much more attractive for funders. So what is it that you think we can learn from structured finance and the work that the corporate finance guys do, or the guys that specialize with structured finance, that assist people with putting together and packaging the funding proposal and all the funding memorandums, putting all the requirements, putting all the offtake agreements and everything to make the funding proposal more compelling for investors? So what can we learn from that? Because sometimes we never think about how to make the funding proposal attractive, and sometimes it can take a skill to do that.
Okay. So when is the time, basically you're asking, when is it time to actually consider having someone to assist you on structuring your funding and your funding needs? And generally in that space, we will use like special purpose vehicles to fund transaction. But generally, those are big contracts. Those are big requirements. However, you can use those ideas on structured finance within corporate finance for you to run in you as a small business to find the funders that you are looking for. So let me make an example. Maybe you started a business and you made a mess, but you have decided to discontinue certain operations or certain products and services within your offering. You now are looking to a new idea and you want to repackage it. You can do that. However, you have to make sure that you have ring-fenced that funding or that proposal. You have ring-fenced it outside of the previous things that you have discontinued. You also have to make sure that as you're building up, you always are aware and clear, am I making profit here or am I making a loss? So that is what I can say about ideas when you're actually thinking about restructuring or structuring of finance in terms of corporate finance, but also in terms of your funding needs, that they generally work on big arrangements, and they will then even create a special purpose entities. And those special entities will then allow you to take what you need from the other business and leave out the stuff that you need so that you can create. And there's nothing wrong with that, guys. It's just that they take a while, because it's about understanding the investment in the process, but also then finding the right funding strategies that will fund that specific. And also understand that at the onset, sometimes there is initial investors at the beginning of the project or program or whatever the investment is, and there's ones that will then, after you have done the initial part, they fall away. And then there's ones that you're gonna need maybe when you're now building up for growth. Again, there will be ones that will stick with you until you actually have reached that, but others are just for the intermediate until you actually are meeting up certain needs. I hope I'm able to answer. There's someone,
yeah, there's a
Peter.
question from Peter.
Okay. At first, I was like, I don't need a loan to run a company. Reasons being is that more of service provider than a product provider. Until one day I landed a big contract which required supply of aircons, and we did not have money to buy. Lucky enough, I managed to get an agreement with the supply and the aircon. After going through our contract, that opened my mind and activated the overdraft from our account, which I declined previously. Wonderful. Thank you, Peter, for sharing that experience. Do you see that, Peter, you use the same strategies that I was talking about, where I said the funding is also with your suppliers. But he also said from that, he then learned that actually by asking for activating an overdraft that he had previously declined. Guys, don't decline. Rather say to them, I'm not ready yet. Find out from them, how long do I take if I actually have a need? Find out more information so that you're always gonna know when you need it, who to call, and how fast they can actually process the overdraft.
Yeah,
Perfect.
maybe just let me add. Yeah, I wanted to add on that as well, on the especially on businesses like Paseka's business, because it's more on the innovation side, and because he's an inventor. So the whole issue of the intangible assets, because some of the businesses are really service driven, and as Peter has said, that he doesn't necessarily have tangible assets that he can leverage from his balance sheet, especially to to make him qualify for more credit. So how does one leverage then using their intangible asset, especially businesses like Paseka, because they are more on the innovation side, and then they invent products to the market, where you'll find that what is more valuable for the business is the intellectual property, because they use their intellectual capital to really leverage from that. So how can such businesses then use their intangible asset to also leverage in qualifying for all their funding that they need?
On that case, so firstly, that intangible assets must be on the books. How you will bring it into the books as you develop your processes and your systems, put in the time and build up a framework for it, and then register it as an intellectual property. Your model could be a trademark, it could be just a innovation, but register it so that it's clear that you're the one who actually designed those processes. And book it book your time that you're spending innovating on it or improving on it into your books. How do you book that? You do it by making sure that when you spend time, that get to be posted on your asset, and maybe you can create a shareholders loan account where you then will be putting that as the loan that the business needs to pay you. Now, as a professional services business, as you're doing that, you then also have to understand that the business is built from relationships. So ask yourself, how are you actually building the relationship with other suppliers around yourself who support you to deliver this product or services? So as you do that, it allows you then to, for example, maybe when someone has done something for you, you make an arrangement that, okay, this is a project we're working on. I will only be able to pay you once the customer has paid. It buys you 30 to 60 days. That, guys, is still a credit, because you are not now paying that person immediately. And that also means how you actually even recruit and build up your team for your professional services team, that they can be outsourced. But when they're outsourced, you pay them at a specific time. So my suggestion is that really start analyzing your business model. Also start looking at, within that environment, what is possible, what is not possible, even if it's for professional services. But also, as a professional services, don't rely only on your income statement. Build the balance sheet. Build the balance sheet, because as you build that balance sheet, it will then also allow you to, at some point, be able to value. Because how you value it, you look at how much revenue you've generated from that applying of those processes. Is there anything else? Rablen?
So maybe what you can do, we can just get into
the funding
of the funders, and then just show us in terms of what the available institutions are, and then we'll take it from there.
Okay, good, thank you, perfect. Guys, please just share your experiences. Thank you, Peter, for sharing. And guys, put in your questions through. I really wanted you guys to ask more questions on the foundation, because the first session was set up that it allows you to see what is the foundation you need to create, irrespective of who the funder you are looking for. But now the second session, which is now, we're now going to deal with different funders within the COVID, so that it allows you to see what is available, what you can apply for, and see how we can actually support and assist you. Okay, I'm gonna share my screen. Okay. I think about a few weeks back, guys, are you able to see my screen? We ran this webinar.
We can see it.
Thank you. We ran this webinar with one of our partners, Dagmar. Dagmar does funding, helps entrepreneurs with funding. She has been doing it for years. I met her about 5-6 years ago. So we were actually just hosting and say, what are the funding? So I'm gonna just take you through what we covered. Please don't mind all these slides. I'm just gonna, that's it, Dagmar. And her website is fundingconnections.co.za. We'll also share the slides with you. I just didn't feel like preparing another different slides because it's the same content. Okay. There's a comment. The board is saying that he has applied in so many government grants and received 0 response, and is in carpentry manufacturing. So first of all, you can apply to government grants. There is no, I just personally feel it wastes a lot of time. But when you have done the application, you have to follow up. You have to hold them accountable. So my suggestion for someone who has applied and did not get a response, you have to follow up. You have to find out how come you're eliminated, because it means you keep on applying and yours goes to the dustbin. You have to figure out why you don't actually qualify, why you are not actually getting shortlisted and stuff. But the third part of the things you have to do, get someone to review your document before you submit it. Don't submit a document which is only you who have touched it. Get someone to review. It might be useful for you maybe to also contact Dagmar. I've given her details in here. I will also make sure even at the end, this lady, just to, as a consultant, to say, here are the grants that I've applied for. These are I haven't got any responses. Can you assess it for me? Is there things that I can improve? She does this for a living and has been doing it for years. I've worked with her on some projects which we raise funds. Even in my own business, I use her to do my business plans. So, okay. So the way we run this, we generally ask question, how many funds are currently out there? And can we specify, because I prefer questions, because questions allows us to be able to figure out if we are. I'm trying to do questions at the same time. I forgot that I have a support from Raphael. Sorry for that. Okay. I'm so used to do this and multitask, go to the chart, go to the question. And then I forget that I have a support. I should just focus on the presentation. Jess is gonna kill me. Okay, so what funds are actually currently there? So the first one is called Debt Relief Fund, and I'm gonna actually just go to them with you. And some of them, guys, please note, some of them have been closed, but they were reassessing if they're gonna open. So you might find some of these links that they have actually been closed, but the aim was for them to assess and reevaluate, especially as we're moving down to different levels. The second one was Business Growth Reliance and Facility. The third one was IDC. The fourth one is Essential Services with Application, NEF, Black Funding, Labor and Employment for the UIF. But this is, again, was meant for people who are actually employers to claim for their employees on the UIF. What happened is that majority of the people were not necessarily compliant, so they ended up saying that even if you are not compliant, you can still apply, as long as you then gonna commit that you are gonna comply and then service the loan which will be created by that compliant. This one is repeated: Solidarity, Giving Hope for Foundation, Tourism Relief, Oppenheimer, Spaza Summit, and Agriculture, and also Sugum. Sugum got closed so fast. I mean, within, I think, 3-4 days, it got closed so fast because they got so many applications. They have done some assessment, but they are no longer accepting any new applications. And one of the reasons why Suguma got closed so fast was also because it was one of the very few first interventions that were there, but also it was generic. The banks currently are offering number 11 and also number 8. I recently received from NetBank, ABSA, the notification for them to tell us on additional funding. So look within your bankers, what is it? Because it's better to apply through your banker because they already have all the information mostly they're gonna need. But what I have found when I looked at the net bank, they are still listing exactly the same thing that other funders are actually looking for. So in all of them, they want you to demonstrate that on the 28th of February, 29th of February, your business was profitable, which then raises the risk for your businesses if you are doing COVID-related products and services, which prior to COVID you were not doing. it means then your plan should be different. You should then be considering raising funds using a contract or forecast demand based on the customers that you had approached that have indicated that they can order a specific number of units. But it also means you should not invest on the too much on Capex. You should try to invest more on the time to get more customers so that you outsource, find people that are already manufacturing, go to them, get their assurance, get their accreditation, because even getting accreditation in place takes its own time. So that then it allows you to increase until you're at a point where you feel, you know what, at least I can sell 60% of what I will produce, then start working on building up the production. So what are the key common requirements that are actually there? They want you to be compliant with SARS and Department of Labor. As I said earlier, they need you to be profitable prior to the 29th of February. Business must be owned by a South African. 70% of the employees must be South African. You must also produce the recent management accounts and financial statements. You must also make sure that when you are not compliant, you do have arrangement, payment arrangement to be able to deal with that liability. Now, generally, the applications, they do take long. And in most, the systems have been overwhelmed, but we have noticed that other, like I was mentioning, Sukum, NEF has improved, and also SAICA. So follow up with them and don't lose hope in making sure that they are actually able to give you a feedback on your application. They were intending at the beginning of the year, before COVID, they were intending to integrate all the applications, but I guess because of COVID, that has fell through, that project fell through, where they wanted to say, if you're applying for funding, we must use one application form in government. So SAICA, NEF, IDC should have a same application, not each of them having different applications. And we were advocating for that. We hope post for this period, they will move and implement that, because it will then mean when you're submitting an application based on what IDC looks for, based on what NEF looks for, and see if they can actually easily pick up the categories of which entrepreneurs they can fund. You can find the more consolidated information, and that is up to date on fundingconnections.co.za. And as I said, Dagmar updates this every 2 weeks. The other day I was speaking to her. She also does weekly newsletters. Sometimes she even sent it twice, where she's just updating if there's a new information that is coming through. Subscribe also. She will actually also be able to help. What I like about her, she can also assist with packaging of the business plan that suit that specific. She can customize a business plan to suit that specific funder. Even though it end up being costly, but you might as well do it. Her fees are not that bad because at the end of the day, you wanna invest time and effort on where you will actually be able to have the high rate of success. And that's the best way of doing it. Rather do something once and do it the best and not do it at all, because then you end up wasting time. For those who need help, there's another support that is also available. ECAS Entrepreneurs got funded by, I think about 2 or 3 corporates to help entrepreneurs to be more compliant. And that is their website. And if you need that direct contact details, that just SMS me or WhatsApp me. I can then send you the CEO's contact details, who will hook you up. Because we found that people were applying, but they didn't have financial statements. They didn't have tax clearances. They were not compliant with Department of Labor. Their employees were not registered. So there was a whole lot of a mess to actually get this thing sorted. So they would be able to also assist and help. I hope they still have funding, because that was actually free. Okay, guys, I hope I has not gone as fast, but I want to go back and forth where you guys will have questions to iterate and also add more. Rapale?
Oh yes. Yeah, I don't know if they still have any more questions again, so that we can take questions just before we conclude, because I know that yes, a lot of COVID relief funds, they have been exhausted because they've been oversubscribed. Everyone was just in a panic to do that. So I'm not really sure if, when you say they have updated the database or the list, will they be able to find on the list of the Dagmar guys, the list of the
Yes,
ones that are still available?
that are still up, yes.
Yeah,
The one that are still
yeah.
up, they are updating that on daily basis. She also allows, you also get a newsletters, so you can see which ones are still active. But also understand that the system really got overwhelmed. I don't think as South African we're prepared. I think also just in general, the financial service industry has never been prepared. We have been talking about this for a very long time in the space of financial literacy, access to credit, talking about access to financial services, and it has been lacking. I think it's better also to talk to your banker, because some of these funds now are actually being routed to the bankers because they have realized that the government could not actually manage the capacity.
Yeah. So I think one thing that we also didn't touch around is that, because you did, when we started, talk about, the mindset of really being able to be fundable. And one thing that we didn't say is really, some people, they would prefer to not do all these loans and all of that, but to be safe, then do the equity. So we didn't touch much more on the equity side, that for the guys that are not interested in loans because they don't want to incur debt. So we spoke to some of the PROPreneurX, and some of them were saying that they are really not part of the whole euphoria of the relief funds because they don't want to get themselves into debts. So, but what are some what are some of the opportunities that people can look into if they're interested more in equity? Or would you even advise for people to share their equity with investors, or they should just stick to debt?
So I personally think you need to do both, irrespective of what business you are actually in. And one of the reasons why I will say that is because when you're looking for funding and you've already have a equity debt that is within the business, it tells the funder that you are willing to demonstrate, and you're putting your money where you are also, you're asking them to put the money on where you yourself are invested in. So having both equity and also having a debt helps a lot. Understand though that for equity, you should be building to invest in it to assist with things that are difficult to raise funding on, especially for yourself. So you should be the one who's taking the high risk items, not the other way around. Leave the debt to cover for the lower risk items within your funding strategy. So that would be my advice. However, I have noticed also that as entrepreneurs, we are very reluctant to bring partners into a business. I think one of the things we're reluctant is because we are still at the stage where, hey, it's my stuff, it's my thing, Let me say this. As entrepreneurs, we have to recognize whatever that you will build, if you're going to build anything that's sustainable, we need each other to build sustainability. You cannot build, if you're able to build a business and make it last for more than 5 to 10 years or whatever number of years, and you have not built a team of people that you work with, you're wasting your time. Building a business needs a community. Business is similar to raising a child. You need the whole society to actually help you to build a sustainable business. And that talks to what I mentioned earlier about having advisors, but it also talks to having stakeholders. Stakeholders or strategic partners that refer work to you. You should have people that talk about you without you being there. You should actually build up support structures of you having a pool of team of employees, different skill set. You should have a team of advisors as a board, as a director yourself, so of people that you touch base when you're scared or you're not sure which way to go. And so I think we as entrepreneurs have to really start looking at how do we build ourselves. And I'm saying the capacity is there. We just need to expand our mind and open up our network to other people and be open and be transparent on the areas of weaknesses, even in areas where we might feel maybe vulnerable. So that's a mindset you should have. But you must also have a mindset of bringing in even your employees to have some insight on your ins and outs on how you run. I mean, I've come across entrepreneurs that generate things like 20 million to 35 odd million, whom they still are the one who are processing transactions in their bank system because they don't want to share the banking details with their employees to process payments. I mean, it's crazy. I mean, guys, you have to understand that if you're doing too much in your business, that business is dead should you die. You have to build system and work on the business, not in the business. When you are working in the business, you are not building systems. You are not building a business that's going to last. So the second mind shift that has to take place in your life is to ask yourself, am I spending most of my time as an employee, as a direct, or as a shareholder? Where exactly am I spending most of my time? And is my time worth the time I'm actually spending? I said to this guy, I asked him, okay, he generates, he makes, his salary is about, 1% of the turnover of that business. He makes about 3 million basically as a director from that business. And I then said to him, okay, let's just take that 3 million and calculate it at a rate of per hour. Because that is how much you are costing the business, right? And I take that and I said, let's get an accountant or someone to do the work. How much is that rate per hour? He couldn't believe the difference. I think as directors, we're gonna need to learn to delegate, build system and delegate, build system, delegate. But then also have supervisory controls and systems to allow you to monitor that things are actually happening and they're happening at the right time and they're being done correct. And we also need to raise our hands quite more often than we have been and say, I need help. I think sometimes we just stay too long with a problem and the problem starts eating us up. So that's a mindset that we're gonna need to actually build as entrepreneurs. And I think when I started doing that in my business and when I saw it being applied by other clients in some of in this space, I saw their business growing. And there's nothing wrong with you admitting on areas of weakness, guys. No one is perfect. No one can do things like all the time in different things. No. Know what you are good at and be comfortable with that, and find people who are good at something else and work together. I said, I mean, Ravelang knows I always say this, that, you know, a black man will rather own 100% of nothing than owning a 10% or 1% of a billion. I raise my case.
Thank you, Precious. It's Jayashree. So I also saw that there were some comments from Depo earlier on. Sorry, just want to switch my phone off as well. So I saw there was a question on Depo, and one of the questions she was saying is she doesn't know what she's doing wrong, but she's applied for so many government grants and received zero response, and she's in carpentry manufacturing. Precious, don't you want to just take a few minutes to talk about not just the COVID specific grants, but the existing grants that exist within DFIs, as well as some of the government agencies like the Department of Trade and Industry and the instruments that they have specifically for manufacturing businesses, and maybe even the likes of the IDC and what they have for manufacturing type businesses? Because there are a couple of the entrepreneurs, as you rightfully mentioned earlier on, that have now pivoted into COVID solutions, which means they are also involved in the manufacturing space. And I know that government as well as DFIs are very interested in manufacturing as a capability.
Yes, Jayashree, yes. Thank you so much. So they are interested. However, they are still putting a stringent requirements. And one of those stringent requirements are, some of it you may not have an experience in. They will ask you the number of years you have been in that industry. And most entrepreneurs are coming short on that. And I think what you have to think about is that who actually has done it, who I can partner with that has done it, that I can actually work with. I've just opened up the website. Let me open up the Dagmar's website, and I'm gonna share this website with you. I've already put a link on it. And I'm also gonna share, I'm gonna make a note. I have a database of funders that was before COVID that actually, that are out there. There's a, before I move on to this.
So Precious, while you're searching for that, can you, I know you sent me part of your presentation, can you send me the second part as well, so I can distribute it to the PROPreneur entrepreneurs, and then that list of funders as well. And then while you're looking for your document, the one other thing that I would like you to also touch on, and Rapalang mentioned this and you mentioned this a little while ago as well. We get quite a few inquiries from entrepreneurs from an equity perspective. And I also want to, although yes, equity discussions are important, it is important to also caution entrepreneurs on what percentage of equity you actually give away and at what stage of your business and for what. So I've had some examples where entrepreneurs call me to say, they've engaged with a certain person. The person wants to help them with mentoring, and they want 20% of their business. And my first response is always, well, what is your business worth? What's the value of the person's time, effort, and support to your business versus what is your business worth? Because if you don't know what your business is worth, how do you make a decision to give away 20% of your business, and for what? So I also want you to just touch on how to make sound equity decisions around your business as well.
Perfect. Yeah, that's quite a bit. Okay. I've just added up. I'm gonna have to stop looking on my laptop for these documents for now. FinFund is also one of the great platforms. FinFund what you do, you just answer about 4 or 5 questions, and then it shortlists about the 5 to 6, between 3, 5, 6 funders that are actually that you can contact. And then it also provides you with their contact details and their website and what are the basic requirements. You can then click on that and be able then to apply for funding. So that's a portal that I have found for different types. I have used it for property investment. I also have used it for generic businesses and including manufacturing. So that is going to give you also a big pool. From what I remember, there was even a study that was done. That is how that database was created on the Fin Fund. Now, that portal is now has been integrated. I just need to confirm that what other funders are now integrating Zero, which is an accounting application where you apply for funding, and then if you have a Zero account, then the funder can access your financials and your accounts. And that is so cool, because then it's no longer you trying to analyze and package it and all that. So that I have found it quite interesting. I think one of my guys also, what is his name? Kumar, he does that too. Okay, let's move on to what Ujeshri is talking about. So equity funding. Equity funding is complex, and one of the reasons why it's complex is because when we start these businesses as entrepreneurs, we do not account for our time and effort from the beginning, from day one. Number two, we also do not set up a minimum and set up the minimum of how much on what exactly we are expecting that business to provide to us as a return on investment. We also don't set the maximum of how much contribution we're gonna make. You find a person running a business over and over and over, but not necessarily coming back to say, where am I actually going? Is this business actually helping me to achieve my goal or not? Because if it's not, then you should be shutting it down. So, and that is why funding is, equity funding is complex. We do not account for our time and our effort, and we don't actually record the money that we have put in this business. As a result, you find entrepreneurs, their shareholders loan account days, but the person is asking for whatever amount. The amount must be based on how much you have put in. Then you go, the other part is the financials. So when someone is coming and say, I want to buy 20%, that 20% must be based on valuing the business. Valuing the business is looking at your financial statement, looking at, is it a balance sheet business or is it an income statement business? If it's an income statement business, what are the sales projections? And how often do this customer come back? And then do the revenue and analysis, and also expenses. So most entrepreneurs struggle with this because of that. If you fix that in your business and you work towards building that capacity to make sure that you account for your time, you account for your contribution, and you also make sure that when someone comes, you can easily value your business. Understand the valuation also depends on the nature of the business. There are different valuation methods that exist. Some are good in other industries, some are not good. It also helps to get a second opinion. You are right, Jesh. You can't ask for, say, 20%. Is 20% of what? Based on what? So, and what informed that? What are you gonna get? What is in return of that? So there's a whole list of things. But I am also saying to you, do not close your door on equity, even if we are building towards this. Be open to it, but just keep in mind that you can demonstrate to your new partners what are the things that you actually have brought into the business and what are they bringing in. I always say to people, most of the time as entrepreneurs, we go around and say we're looking for funding. I think we're using the wrong word when we're saying we're looking for funding. We're looking for capacity resources, because the money help you to assess a certain asset for you to do what needs to be done. So start focusing on, what do I need to produce or to do what I need to do? And that thing that I need, maybe I need a machine. Okay, I need a machine. Who provides the machine? Who rents out the machine? Can I go and talk to those people? What do they need when they are talking to me? It will push you away from thinking funding is about going to the bank or to the funders, because even that funder is still going to ask you a same question. Have you spoken to your suppliers? Have you discussed this? Have you done this? Have you done this? So yeah, I hope that is able to answer. I'm gonna just get a website for FinFund. Someone is saying, could you also touch a bit on funders who deal specifically with property services and property development? Whoa, yes. I like the question, Smart. So, property services, I will not have a list, because property services, sometimes they fall within the generic, but property development, definitely. There is actually, I recently made a list. I will take a picture of it. I have not typed it, apologies for that. I was looking for property development, plus also property development within student accommodation. So you have to understand this. Property development is categorized in 2 levels, actually maybe more than 2 or 3, 4 categories. Category 1 could be, what development are you doing? Is it commercial? Is it residential? You'll find that within residential, there's another sub of that. So maybe residential, I'm looking at flats, maybe I'm looking for houses, but again, which LSM? So when we're talking about you as an entrepreneur matching the requirements of the funder, we're asking you that don't take the application of the funder who funds student accommodation and you then send them the housing or you send them the flats, because that funder is not actually even going to look at that fund, even though they are in property development. So I do have some of the list. I will share, I'll make a list of the list of funders, and I also can share my untyped short list. I think I did about 80 for that could do both accommodation for students, but also residential property. But I don't have on property services. I don't have funders that do property services. I have seen though that it generally falls under generic in terms of the structure. So maybe look at that website I was talking about, which is called FinFund. I don't know, is there any other question, Robling? Jayashree, do you want to do a follow-up?
Sorry, Precious, what were you saying? Do you want to do a follow-up on?
On what I've just outlined on the equity, and in following up on your questions that you had asked.
So on the equity stuff, I think you've answered that question, Precious. I just do want to caution entrepreneurs again. Be wary of individuals that come into your business to say, I'm an amazing mentor. I can help you grow your business. But in order for me to do that, give me 10, 20% of your business. I mean, you know, we specifically run non-equity accelerators. And there are a lot of accelerators out there and business development companies that will take a percentage of your business to put you on a development program for which they are getting paid to deliver on. So we get paid by Motseng and by Kagiso to develop entrepreneurs. The last thing we want to do is charge entrepreneurs referral fees, and this is another thing, for work and access to market opportunities, because we already get paid for our services. So be very wary of jumping onto accelerators that will promise you access to markets but take a percentage of your business. You have to know what your business is worth. I mean, on one, and you've delivered, Precious, for me on quite a few programs, including our IBM program. Early on, and I want to share this example, early on in the discussions with one of the IBM entrepreneurs, they said they got an offer from a business to take 20% of their business for about 400,000, just over 400,000 rands. And at the time, he was desperate for funding in order to grow his business, and he needed to bring in some developers. And I asked him, but, what's your business worth? And he didn't know what his business was worth, but he was willing to give away 20% of his business for 450,000. And I said to him, but what's in your pipeline? And when we calculated his pipeline and the potential, he was close to making 4 million at the end of that financial year. Now, when you start looking at that, it doesn't equate to, what he was getting for 450,000, giving away 20% of his business. He's now close to an 8 million turnover business. And it would have been such a pity had he given away 20% of his business for 450,000 at that point in time. And he did it without any support from this individual that wanted to give him this for exchange of something that he perceived as value at the time. So I just want, at this stage of the program, most of these entrepreneurs have really grown their businesses. They're becoming businesses that you want to reckon with. They, are supplier ready. So they have great models. And at this time, everyone's going to be chasing you. People are going to throw funding at you sometimes. And sometimes they're going to want to take big chunks of your business. They're going to want you to get onto other programs, in the promise of giving you something bigger. Just be very, very wary of what you actually take on, because if it looks too good, sometimes it's too good, right? So you've got to be very, very careful. And I just want to caution entrepreneurs to think very carefully about the type of funding. Even, and Precious, you and I chatted about this, even with all of this funding that's available with COVID-19, very, very tiny percentage from what we have seen is actually grant funding. It's free money with no strings attached. Most of the funding that we've seen with COVID-19 relief is not grant funding. It is loan type funding or deferring of payments, which means you still have to pay it with additional interest because there's a cost value to money. So it's important to realize the implications of taking on some of those financial assistance mechanisms that have been put in place. So that was just my comments on what you've said, Precious. Thank you so much. I think it was a great session.
Thank you so much, Jayashree. There is someone, okay, let me stop multitasking. There is someone, okay. Oh, thank you, Deborah, thank you. Okay, how does your company help small businesses? So we help small businesses to build capacity because we have seen that the funding is there. Money is there, guys. I don't want to lie to you. But most entrepreneurs are just not ready. Capacity is not in place. The people are just struggling to make sure productivity is right. The business is profitable across. The systems are working. So we help you with those things. And we do quite a lot of consulting. We do business health checks. And we do quite a lot also once we've done the consulting and then provide with the capacity for yourself and also for your team. Our aim is to build directors. Is to build you to be a director and stop being an employee because that pays the least money. So that one day you can be an investor, a real investor. Mpo, your hand is up. I'm going to allow you to talk. Mpo, go ahead. Rabeling? Mpo? Please go ahead. I'm trying to unmute you. I'm unable to. Rabeling needs to actually do that for you. Or in the meanwhile, maybe type your question. Maybe we lost Rabeling just now.
I have unmuted Mpo, so she is able to talk if she wants to. Mpo?
Yes, she has raised a hand, Jesh.
Yeah, I see that. I'm also trying to unmute her. There might be something on her side that she needs to do. I think, Mpo, put your question onto the chat. It seems like we're having some technical issues in unmuting you. You might have to accept the unmute on your side.
Yeah.
Okay, otherwise, we can always direct those questions to you later as well, Precious, if you don't mind. If any of those come through, we'll send it through to you.
No, I honestly don't mind. I have found the list of funders, but what I have realized, I have found the list of funders. I just realized it's not as updated as I would like, but I think I have another one on my phone. So I'm gonna just collate all that information, Jesra, and email you the list of funders and also the one that I have found in property development.
Okay,
I
no,
think, guys, don't get yourself to be desperate. I would like to share this. Mpo, are you on? I think Mpo is on now.
Yes. Mpo, you've been unmuted. You can speak to Precious.
Yes. I am on. Yeah, I need to check. That was awarded to me for local. That the land is zoned for residential, so we decided to turn that area into a township. But I'm struggling to get funding, so I'm not sure if I'm knocking at the wrong doors or what. So yeah.
Paul, can I make a follow-up question?
Yes.
The land that you have found, you're saying it has been rezoned. Is it a service land or unserviced land?
It's unserviced. So the municipality has given me development agreement, land availability, and there's SLA. So anything that I would like to do, that say to me, I can zone or subdivide. So it's only serviced for residential, but it's not serviced. It only has bulk water. And I think the sewer, that's all. Doesn't have much.
So you will then have to look within. So what happens, the way the banks are structured, they have units, and they will have a unit for property development. You will need to visit your bank and find out what are their units and their requirements. But ask it not as yourself, as a person who's going to do it. Ask it as someone who's doing some sort of a research, so that you don't get intimidated by their questions, but also you don't feel judgment when there are things that they don't know, just to protect yourself on these ideas that you want to work on. I know FNB and also ABSA. The property development guys, they can take you from, and the fact that you even have a service level agreement with, a service availability with the municipality, it indicates that there will be. But what you need to start asking yourself, who is on my team? Because you should have a team of quantity surveyors and all. You should start building up a team, because from that team, make sure you choose the team that is more matured than you. Guys, again, as entrepreneurs, sometimes when we choose our service providers, we choose our service provider at the same level as us. When you choose the service provider and you are starting up, choose the service provider that are way ahead of you. They will then connect you with people in their networks. And the trick in building that is always, like we were talking earlier about a certain mindset and a certain way of thinking. You're gonna actually start also believing that you can do this. Educate yourself on how this thing is done. Find someone who has done this and work with that person very close on waking up step by step. And I'm saying for you, for this is the one that the packaging of it has to be according to the funder's specification. Mpo, don't be afraid also to even build up a structure to a point of saying that in your own network, people that are your friends, are there any people that trust and believe in you? Because those people could also be part of your investor team, your initial investor team that start contributing at least 1,000 rand or 3,000 rand or even 5,000 rand, depending on the LSM and your ability. Because that can help you then to start building up your shareholders, so that you start building up the equity that we were talking about earlier. Because when you go to the bank, you are building up what? The debt. So start really expanding yourself. We as Black people, we love stokvels. That property, have a stokvels maybe for that property, but also consider having a stokvel maybe of even people that could be potentially be buyers in that property. Do you understand what I mean? Who could be actually be customers to you?
No, I understand. Because, yeah, I'm in the process of joining a stokvel which is dealing with property investments. So I'm just waiting to hear maybe the initial, because that's what they do. You know, you become a member at a certain value, because yeah, it's been a challenge to source funding, I must say.
The reason why it's a challenge is because you have not created a team around you that has the networks. Guys, South African economy is a relationship economy. You have to know who's who in the zoo where within your sector. If you don't know that, you then are at a disadvantage.
Can I just add something to Mpo's question? I know that with Mpo, the funding is quite large kind of funding, because of the development, you know, is really a large development that she's pursuing. So, and maybe it goes back to the question that I asked earlier regarding the structured finance, because any funding that is large sometimes is more easier, and it could win mostly when you approach it from the structured finance point of view. And then I've seen that is very helpful when people use the guys from the corporate finance space who know how to structure a deal, because it's more the deal structuring type of requirement where you can leverage, you know, guarantees and leverage proposal to be a winning, you know, proposal. So yeah, it could be, you know, one of, because I know the lady who was also looking for funding from the textile space, with IDC, she was going back and forth until she got someone from the structured finance space, and then they put together a funding proposal. And also I know within the banks, they have divisions for structured finance, and then the structured finance, they're able to look at a funding proposal on a case-by-case basis, because if you go the normal way, they tend to just consider it on a generic basis. But the people that deal with structured finance within the banks, they're able to tailor make it to suit what exactly what the bank is looking for.
Thank you, Rapulangi. Yes, indeed. Paul, all we're saying to you, look at all avenues. Yes, you might be joining this group here, Stockfell, but it does not mean you can't create your own, especially when you're thinking about the area where you are targeting. There will be people who are buying into those houses, whatever that you're going to build. Consider them also as people that you're going to build with. Old Mutual, from what I remember, also they are doing quite a bit in property development. So consider also looking in those spaces. FNB and ABSA, as I said, it would be the best option for you for me. I've just, guys, is any other comments and questions? I've sent you the FinFind website. It's on your chart. No, it's not on the chat. Is it on your?
Gugu's raising her hand.
It's on the chat there. It is on the chat, Precious. We'll share it after the session as well.
Thank you.
Dupur, I've unmuted you if you want to speak.
Oh, hello. Yeah, I wanted to ask, Precious mentioned the importance of partners, and if you want to grow, you need good partnerships. I just wanted to clarify, by this, does she mean, shareholder partnerships that buy equity into your business? Because also now, as businesses, we know that to go for bigger projects and contracts and tenders, that we must consider coming together as, via a joint venture and that kind of solutions in order to go for those big projects. So I just wanted her to talk to those two, joint venture kind of partnerships for specific projects, and also maybe, how do you choose a good partner to actually buy equity into your business and become a shareholder into your business? What should you look out for and all of that stuff? Thank you.
Thank you so much for that question. So when I spoke about strategic partners and also alliances, and also talking about equity partners in other instances, I'm not necessarily talking about people whom you are going to have a shareholding in your business. I'm talking about people that are within your ecosystem. Are people that I said earlier, is people who are going to sell you even when you're not there. Is people that are going to help you to actually reach your goals. So I am not limiting it to equity partners. Now, partners, in my case, I have people that I refer them work. Dagmar is one of them, but Dagmar also refer me work. I have people who are my strategic alliances, like Yidi. Yidi, we work on, I provide a specific service, but in the overhaul of the program, but in different areas. And I intend to do the same on providing work. It's almost like you give, you get, you give, you get. So a partnership is like any other relationship. Both parties have to value each other. And so first, when you are looking for partners, make sure you choose people that value what you're offering. But two, choose the partners that have the right value system that is the same as yours. What do I mean? So I will make an example with you. With me, I knew Jeshru when she was still at Standard Bank, and all the time, Jeshru was always focusing on what entrepreneurs were saying. And she will design program based on what entrepreneurs are saying, because she cares about people deep down in her heart. She loves, she cares. And for me, that's what matters. It's not driven by revenue. It's not driven by, so for me, it's always about values. What values does that person have? So all the partners or people that I've worked with, that is one thing that is a non-negotiable for me. What values does that person have? Does that mean I have not worked with people that their values were, yes, I have when I started, when I didn't know what I should be looking for. But over the years, I mean, to a point, last week, for example, there was someone that I was supposed to be working with. They were supposed to do some SOE on my websites and updating certain things. And when there was some sort of a confusion or some sort of, should I say, things not being done the right way, and I had made 3 or 4 follow-ups, and this person replied quite badly, I just move away from that meeting, from that arrangement. And one of the reasons is I have come to a point where if I trust my emotions and how I feel about something to a point that when I don't feel right about something, I don't mind to walk away, irrespective of whether I'm going to lose the money or not lose the money. So go into a relationship, not just about making the money, but go in to create a relationship to be of service to another person. I have received work on instances where I actually did not, if the client did not even know me, but the work was the order was sent to. Hello? So I'm making up this practical example for you to start applying it in your industry and really thinking hard of who do I need to be on my team. I have people whom we are not joint partners, but I get 30% of their revenue each time when they do the work under GAD name. And I work with people whom I charge a fee for them using my content, delete content. So it doesn't matter which structure, as long as it fulfills the service that you are supposed to do and it fulfills your goal. So look at the people around you, look at and start identifying people that have referred you work, start identifying people that could be partners. It doesn't have to be director on the shoulders or having a share equity. They may not even have a share equity, but they may share a transaction. So you can even have people that you partner with on a specific transaction. So just be open in opening your network, as I was saying earlier, and having a different metrics or models of it, depending on who you're dealing with. But also don't mind saying to people, let's have a cool-off period. Don't mind saying that. That helps you because it allows you to understand the person, know the person. And the cool-off period can be 3 months to 12 months, depending on how comfortable you are. So those are the things that I would really like you to think about. So don't be limited that someone has to own some shares in your business. There was another hand, Raphael?
Yeah, I think it was either Gugu or someone with Galaxy. I don't know who Galaxy 9 is.
It's Spoomy.
Let's see if
Spoomy's on Galaxy 9. I'll unmute him. Okay, Spoomy, you should be unmuted by now. I think he has to do something on his side.
Yeah, just unmute from your side, Spoomy. So that
okay, he's unmuted now. You can go ahead, Spoomy.
Oh, hi, everybody. Hi. Thanks for the nice session. It's quite a mind opening. Just a question on the issue of the PO funding. Probably, as you all know, that probably you get a deal, you signed a contract already, you get a PO today. As an entrepreneur, you're expected to do delivery in 2 to 3 weeks, you know, or in a week's time, or whatever the case may be, since you probably, when you tender, you don't disclose a whole lot of things, but the client then wants the stuff to be delivered, and payment comes 30 days after delivery. So the issue of funding, I was asking, my question is how quick and how soon, and which one should we consider when you're looking for a purchase order funding to be able to deliver to your client in time? Is there institutions that also can help with quicker response as far as funding your contract? And which one is best? Because you know, you get these people who have their money in their houses, and when you tell them I've got a PO, they would expect a certain big portion of your profits, which then sometimes those things don't make sense after you've done delivering, and then you realize that your profits are next to nothing because you had this loan that you had to pay to this person. So just the question on that, the question on the purchase order funding to be able to deliver. Thank you.
Okay, thank you for that question. So your first one is to go, it's your suppliers, is to look at the order that you have and check your credit limit with your suppliers. If your credit limit is smaller than the purchase order, go to them and negotiate. Step number 2 is to go to your bank and get a credit card application, because the turnaround for credit card application, if you have a clean credit, it's actually pretty quick. There are definitely institutions that provide purchase order funding. I don't have a list with me, but I would like you to actually consider Spartan. You remember I mentioned earlier Kumar. So Kumar is actually a founder of Spartan.
Okay.
That would be one of the places that you can look at. Lulaland is also one of them. The people.co.za is one of them. So there are a lot actually that are there that can actually provide the funding. What I would like you to actually do, go to your Google and say purchase order finance. The list that I've just given you, because the ones that I'm giving you now as names, I know them personally, but the others, Lulaland, I actually even tested them, and their time is very quick, and they are very specific on how they actually provide the funding. So, and when you have done that, you actually can then be able to ring fence this purchase order. Make sure though your purchase order does have some profits, because remember that profit is what they're going to be looking at as in terms of their return on investment. Okay, so I hope I've assisted you. Just remember, if you keep your relationship with your suppliers a good relationship at all times, that is the key here. So that should that order comes on early, you can be able to easily respond. That is why it's important that you must keep that arrangement, a good relationship. But get your bank to give you a credit card. The last one that you can do, if you have a purchase order that is urgent and you need some excess cash, if you have debtors, or should I say customers, that owe you money, and those customers have not actually paid you the money, you can also do something which we call it. It's a debt financing. You're financing using those customer lists of people that owe you that money. It's called it's a session. It's debt sessions. We are basically giving the list to the person who does debt collection. Instead of them giving you 100 Rand that maybe your customer owed you, they generally will give you between 85% to 75%, also depending on the risk, because then that will allow you to have a quicker cash.
Sure.
It's called debt financing. I mean, debtors financing. The other word they used is called invoicing. They call it debt invoicing. So debt financing actually can help you. I've worked with Standard Bank on that. I've also worked with ABSA. You basically are taking, you are cashing in on the money quicker than your customers. But for you to do that, make sure that your customers' terms and conditions are intact, your accounts are going on time, your statements are right, your invoicing is right, the delivery notes is in place, all those good things that are controls around your credit is very important. Screening also of your debtors is also important to make sure that people that can actually pay you back.
Okay.
Okay, thank you so much for the question.
Thank you. Thank you.
Yeah, I will also share with you the details for the hookup dinner, because the hookup dinner, they do PO finance as well.
Hookup dinner, isn't that the people's fund, right?
Yeah, they've got the people's fund thing, and then they've got also specific purchase order funding that they do.
Oh, okay. Yeah.
Yeah, I think that is that. If there is no question, I'm not sure if there is any other one that we that was outstanding. Dipuo, okay, we've got Dipuo.
Hi,
Dipuo.
Hi, I'm Precious. Can I just ask a question? So, like I said, I'm in carpentry manufacturing. We do custom-made built-in kitchen units, wardrobes, walk-in closets, bathroom vanities, and all of that. And right now in the business, I'm doing fairly well in the residential market, but strategy-wise, I've been looking at going into the commercial market. I recently met space planners who do project management, and they get a lot of deals from corporates. And I got onto their database, and part of the questions that they were asking me is if I can do the work on like a 30-day credit, which I was a bit nervous about, because usually in the residential phase, it's normal to say to the customer, before we start any work, we require 50% deposit. So I wasn't sure how to answer, because I was thinking that, does it work otherwise with the residential market? Will they now not give me business because I've said no, I work on 50% deposit before I start any work? So yeah.
Okay, so Sissy, there is absolutely no you as a business, you can have terms and conditions that are different from each of your customer profiles. The customer profile of these clients are not the same. Therefore, the risk is not the same. So for corporate clients, you can have the terms and conditions that are meeting the guys that in that industry. But for residential, you can continue with 50% arrangement as you have always done. So there is you are not breaking any law there. Your aim is always to be transparent, but it's also about the risk. The risk is way higher when it's actually residential as compared when it's actually business to business. I hope that answers it.
Okay, yes. Thank you.
Okay. You're welcome.
Yeah, I think, that is it. Supposedly we did address all the questions. And then, without taking any more of your time, Precious, the precious time of Precious, I think we have come to the end of the session. Thank you so much for sharing, as always, your very valuable information. Something that we always chat with Chase is that in the most of the sessions that we have in the area, especially from the banks and all of that, you always have the highest ratings.
Really? That has never told me that.
Well, it's actually you and Jay. So between the two of you, you guys get the highest ratings.
Highest ratings.
Not me, Jay. Jay.
Thank you so much.
Yes. And me and Jay works very well. So
Yes, well, thank you so much, Precious, from my side as well. I'm just so glad that the entrepreneurs had an opportunity to engage directly with you. So please do send those follow-on slides and contact details, and we'll make it available to them as well. We might also be in touch if there are any financial mentoring gaps that we identify, you know, as we do the mentoring for the other entrepreneurs. So we'll call on you for some of that as well. So you will get to engage with them one-on-one as well. So thank you so much. I'll hand over to you, Rapalang, to do the closing. And bye, Precious. It was lovely seeing you again.
Thank you.
All right, thank you so much, guys. We have indeed come to the end of the session. Just a reminder as well, I did send an opportunity from Mr. Mutiba, one of the guys that ran the session with us on the legal stuff. So please do respond to that or reach out to him. But I've also sent information for Dipuo, because I thought some of your services could be required in that project. So please just do respond to that. If you think you can provide any of those services, reach out directly to Mr. Mutiba. I've already told him that the PROPreneurX will be calling him, and then you guys can take it from there. So yeah, otherwise, thank you so much, and then we will keep engaging on the WhatsApp chat as well. Thank you so much, guys.